Assalamu alaikum wa rahmatullahi wa barakatuh. Good evening. Hello, I am Nematullo Halimov, and my student ID is 316. I'm a student at the University of Nigeria, Madura. Today, I present my final assignment for the cost accounting course titled the financial, the Financial Perspective of the Balance Scorecard, and I want to express my gratitude to my lecturer, the Honorable Mr. Dr. Sultan Sia, SEMAK, for their profound guidance on this topic, and to everyone who assisted me in preparing these materials. My presentation will demonstrate how a company's financial success is significantly measured and linked directly to its competitive strategy. We begin by establishing the context of modern management. Corporate success is evaluated by the firm's ability to deliver sustained long-run financial performance over many periods, not just the present one. The company's strategic plan is the essential roadmap. It outlines how the organization will compete and how it will differentiate itself from rivals. Because we cannot rely only on outcomes that already happened, which are called lagging indicators. We use a framework like the balance scorecard to continuously monitor and adjust our actions. The Balanced Scorecard is a framework that looks at the performance from four perspectives. The first one is financial, and the second one is customer. The third one is internal process, and the last one is learning and growth. The financial perspective is positioned at the very top. It holds a sense of supremacy because the ultimate objective of most profit-driven companies in the creation of shareholders' wealth. This means the objectives in the other three perspectives, whether it's streamlining internal operations or enhancing employee training, must serve as the necessary foundation for achieving the high level of financial goals. Companies' financial monitoring must perfectly align with its chosen strategy. If the strategy is cost leadership, the financial team focus on tracking income generated from efficiency. They look for massive success in the productivity component. If the strategy is product differentiation, the focus shifts entirely to revenue. They look for success in the price recovery component, proving they earned a premium price on their unique product. To get a cleaner view of shareholder value, modern management uses metrics like economic value added, like EVA, which provides a key internal assessment of value creation. Here the core analytic engine of this process is strategic analysis of operating income. This methodology allows us to take the total profit change and break it down into its strategic origins. Let's define what each component is designed to show in details. The first one is the growth component. The growth component isolates the impact on profit caused only by changes in sales volume. It tells us if the market expanded or if the company captured more share. The second one is the price recovery component. This capture the profit change due to price variances. This includes both the revenue effects, what we charge customer, and the cost effect, what we pay suppliers. And finally, the last one, the third one, is the productivity component. This measures the change in cost due to entirely to operational efficiency. It captures savings from using less materials or eliminating fixed capacity. Here now we'll analyze the chipset case study. Chipset has a cost leadership strategy, meaning they are highly focused on efficiency and cost control. We are comparing their operating income between 2 years, 2019 and 2020. In 2019, operating income was 2,750,000 USD, and in 2020, operating income was 5,725,000 US dollar. The total profit change is 2,975,000 favorable. Our analysis will now determine exactly which of the three components was responsible for this nearly $3 million profit increase. Here we begin with the growth component. This measures the change in profit resulting only from the increase in units sold. The revenue effect of growth is calculated by taking the increase in units, which is 150,000, and multiplying it by the prior year's price of $23. This immediately generates a strong 3,450,000 favorable result, confirming market growth. Next is the cost effect of growth. We calculate how much material should have been used for this higher volume based on the prior period standard efficiency. This calculated increase in material usage resulted in a cost of $630,000 unfavorable. And importantly, the cost effect for fixed cost is zero for this component. This is because the company already had adequate capacity in 2019 to handle the increased demand in 2020. The total growth component is 2,820,000 favorable. The second component is price recovery. We look at how external price changes impacted profit. The revenue effect of price recovery was unfavorable because cheapest dropped its selling price by $1 from $23 to $22. That the total cost was 1,150,000 unfavorable. The cost effect of price recovery was also unfavorable, indicating they faces price pressure. The direct material price rose from $1.4 to 1.50 per square centimeter, costing $345,000 unfavorable. And the other one is the conversion cost capacity also rose, costing 262 $5,000 unfavorable. When we combine the negative revenue and rising cost effects, the total price recovery component resulting in a loss of 1,757,500 unfavorable USD dollar. Finally, we analyze the last component, that is the productivity component. This component is the ultimate test for chipset's cost leadership strategy. Productivity captures savings from true efficiency and capacity management. For variable cost materials, chipset's internal process improvement was a major success. They used 550,000 square centimeter less material than the standard required. This efficiency resulted in a large cost saving of 825,000 USD favorable. And for the fixed cost capacity, chipset strategically reduced its total capacity, a process known as downsizing, eliminating unused resources. This proactive management yielded a huge saving of 1,087,000 favorable. The combined total productivity component is a remarkable $1,912,000 favorable gain. Well, now we can now draw our total conclusion, like final conclusion, by summing up the components. Okay, first we have here the growth, that is 2.82 million favorable, and of that, we have price recovery that 1.76 million unfavorable, and productivity that is 1.91 million dollar favorable. So the analysis confirms that chipset successfully executed its cost leadership strategy. The reason they increased their overall profit was the massive productivity gain. The $1.91 million favorable result from productivity proves that their internal cost reduction and efficiency initiatives were successful enough to offset all the losses caused by unfavorable pricing pressure. The results show that internal efficiency was the main contributor to profitability. Well, conversely, had the company used a product differentiation strategy, this large negative price recovery component would have signaled a failure to execute because they would have failed to earn premium price. Now we come to the end, to the conclusion of this materials. So, from all the analysis that we did in these slides, so in conclusion, the strategic analysis is not just bookkeeping; it is a diagnostic instrument for strategic effectiveness. It is imperative that managers focus on capacity management, continuously monitoring and reducing unused capacity, that is the wastage, and that is unused capacity, which is crucial for enhancing capital efficiency. And the other one is accountability, ensuring that recorded profitability is truly traceable to successful strategic actions. And the written use of this analysis ensures that long-term investment decisions are objective, thorough, and strategically framed. Uh, this was my presentation. This was my presentation for the uh, assignment for cost accounting. And now we will finish this presentation. Thank you very much for your attention and your time. Wassalamu alaikum wa rahmatullahi wa barakatuh.